Yo, welcome again to this channel. Kariboni Sana. We're going to talk about on Friday's trades, and thank you for being here. And today is on Sunday. I guess a few minutes to Monday, and we're going to see how I did read price on Friday because I've not done one. I'm gonna be talking about Friday and also give whatever I'm seeing for this new week. So I drop down. Let's get this cracking. And I was trading Euro USD, and there I did mistakes and I repeated what I shouldn't have done. But let's get cracking. I don't want to delete anything. Uh, I want to show what I really did at that time. So I won't delete anything. So what I wanted to see, this candle was on Friday, as you can see, 17th Friday. So I was bearish on that day. And what did I consider? Because as we drop down to this price action on Thursday and Wednesday, in the lower time frames, we had formed a market maker sell model. So I wanted to see price retrace into this level, the 50 fib that I've marked there. I wanted to see price retrace the lower and to this level from which we would anticipate buys, but that didn't happen. But what were we seeing on Friday? We had these equal lows here paired with this fair value gap, this candles low and this candles high. We have this huge fair value gap there. Friday, on Thursday, this candle kind of tapped into it, but it formed an equal lows there. But on Friday, we can see what happened. So dropping lower to my lower time frames. Here is the 4-hour chart. And how did I read this? Here we can see I'd marked that SMT, which whereby GU had made a lower low, but EU had made a higher high, not a lower high in GU, but a higher high in EU. We can see it. So if I go to EU, GU, I mean, we can see that this is the SMT I was talking. This high didn't break this high. So on Wednesday 15th, the 8 a.m. high wasn't broken in GU, but if we can see on Wednesday 15th of EU, this high was broken here. So I saw that as an SMT, and an SMT is a more confirmation. If you are bearish, it confirms that it we can use that as a confluence. So I did use that as a confluence, and we can see what price did on Thursday over here. Made a high, cleared that liquidity, and was going lower. So if I go to the 1-hour chart, I don't want this to be long. That's why I'm a bit doing this faster. So we can see, and that's the I made that high, and we were in a sell. So I did use this is the, I guess you can remember, the daily fair value gap high. You can remember. So these were the equal lows over here. You can see how they were grabbed and priced up into this daily fair value gap. So as I was reading price, I did have these the Thursday's high over here. That's the Thursday's high, and the Thursday's low. Where is Thursday? Around, this was Friday. Thursday's low, I guess around here. That was Thursday's low. Okay, yeah, let's extend it this way. So my analogy was, we can see market opened around 12. Sorry. So the market opened at 12, and I'll be utilizing the London session at 2. I'll place my vertical line at 2 over there. That's the 2 candle, and upon using my Fibonacci tool, I determined the constant encroachment or the equilibrium point of this Thursday, the Thursday. So this is the horizontal line. This is the constant encroachment or the equilibrium that separates the premium and the discount of Thursday. Okay, so the red line, I don't think this is dirty. You can relate it. This one is liquidity that was that I had labeled before. So anything is not deleted. I guess this Asia, you can see Asia equal highs around there. I guess I had deleted something here from 8 p.m. We can see we had this consolidation. Let's use all this consolidation. TL2 or did this candle around 1. So you can see that consolidation that is in between the Asian range. Let's use even this candle over here. We have the highs and the lows, the Asia high and the Asia lows, but you can see the highs there are so clean and the lows are so clean. The highs and the lows are so clean there. So since my analysis was, since I was bearish on this day, I wanted to see price retrace from discount to premium, because we do not sell while we are in discount. We want to sell while we are in premium, and also buy when we are in discount. And this level, I was watching price, and around this point, I don't usually trade London session, but this was a clean place to trade if because I was watching if I should have had my plan telling me that I should trade even London, then it was a sweet spot for me to trade. Okay, so what did I see? I saw price run these Asia lows over here, and also ran these previous day lows. You can see this low was ran, and also these equal lows here. The liquidity below here was encaged, and we saw how these candles the wicks did the damage, and then the candle closed. So around the 15 minutes, we can see how it did play so well. The liquidity was grabbed, the Asian lows was grabbed, the previous day was grabbed, and since we are in deep discount, then we can look for buys. So I watched this. I was here. I really wanted to see price retrace, so it retraced higher, tapped into these equilibrium in premium, and I had labeled I mean this 1 hour fair value gap there. This was the point I wanted to see price go lower, act from there. So it I labeled this vertical line at around 7 a.m. That's during the New York Open. And something I realized, like, I will not be trading the first hour of the New York Open. No. It's something for the 2 days for this week. something that I've learned, and will not do. The first hour I will not be trading unless and otherwise. So I saw these price these candles close above there, and this one closed inside this 1 hour fair value gap. So it was a sweet spot, or I had started to see my confluences to go lower, but I really wanted to see a market structure shift. So my first trade I was taken out because no, I didn't trade here. I'd seen this huge candle was a significant candle. It gave me it. Since I was bearish, I wanted to see this, and it did happen. Then we have this consolidation, price rallied higher, cleared this liquidity here, and then we can see how price played out. Yeah, I took a trade here, and something I learned also, I will explain why I did these trades, because I followed my plan and I executed on my plan, but my analysis was wrong. And something I had to learn here, you can see in the 15 minutes there's no market structure shift, you see here, but the lower time frames I was using the 5 minutes, and the 5 minutes usually like gave me a market structure shift, but the 15 didn't give me. So something else I will be using is I will be confirming my market structure shift from the 15 minutes time frame. Okay, so going to my entries, what I saw was this. You can see these highs have been cleared out. Okay, cleared out. We had this fair value gap over here projected, rallied higher, then it rallied lower, creating, giving us a market structure shift. So I did enter here because around the 3 minutes chart there was around this order block, so market trades put us into this trade, then sharp rallied higher, taking us out. Okay, again, that was the first trade, because I took this trade, my first trade, it was a win. I wanted to see price decrease to this discount level because it had shown. So I had seen this order block here, price none. Then I was watching this down close candle here. When this candle closed and we had this bullish move, so I wanted to enter on this candle, on this bullish candle. So as it retraced, I entered with my target being 1 to it was 1 to 5. Yeah, it was a win, but these other ones were losses. So here, after I'd been taken out, I waited for another opportunity. I saw these down close, these highs had been taken also. So as I was reading, and we are already in premium level, so we can sell off. So what happened, price only down, cleared these lows, created another market structure shift. Here there was a fair value gap that was let open, so I entered at the low of fair value gap. Price showed signs of rallying lower, and also I took this 1 hour fair value gap to act as inversion fair value gap, to act as resistance, but I was wrong in my uh, buyers, so the market rallied higher and took me out. So also something, I had made a mistake. We don't sell while we are in discount. So here I was watching something and I realized I had made a mistake. So using this high, you can see a Fibonacci here, this high over there and this low over here, this is the equilibrium point. So I could have sold at around this point, but I made another mistake, I sold in discount. So but at the end of the day I could have been taken out and market rallied higher. So on Friday I was wrong because the candle closed higher. I was wrong in buyers reading, and that usually happens and we learn from there. Something else I've confirmed is market structure shift should be confirmed on a 15 minutes time frame. Yeah, if it will not offer, then that day it will be a freestyle day, no trade. So something I've learned, yeah, I had learned from the Thursday and the Friday trading. So I'll delete these so that we'll go back to the drawing board and see what Friday had got for us. Yeah, I can delete everything. Then now I can use the Friday lows and the Friday high. So yeah, is my line around Friday's low is here. The Friday low. Then we have a Friday high at this point. So I'll delete these two. So I'll drop back to the daily chart and see what we are seeing. So I'll delete all these. Yeah, the 50. So what we can see here, we have these high. There is a fair value gap high that has been gravitated to, okay, and price has already on Friday we can see that huge candle. You can see this huge candle here, and we can see the Thursday. These Thursdays, the Thursdays high, whereby I might, or I would like to see a rebalance. How do you call it? An immediate rebalance form. So that's a rebalance. Rebalance point. So, and I'll make it kind of green, yeah, so that it can be clear. There we are. We've seen these price had gravitated to this fair value gap and also cleared that sell side liquidity, dropping lower. Here what we can see is we have this fair value gap over here, these candles high and these candles low. We have that fair value gap, and also utilizing the high and the low of Friday. You have the low here and the high there. So we have this 50 level. Let me use this trend line. Over there, make it red over 2. So let me use this dark pink. Yeah, that's our 50 level, whereby if market would trace, I would like it to see it drop lower 50 fib. Yeah, immediate rebalance below that. Yeah, at around this point we can see these high low higher high. We have these this candle here. Price might also act around this zone, continue rallying up without tapping us into. But let's go down to the 1 hour and see what the market got for us. I have also this 1 hour fair value gap. It might be tapped into, then from here we can look for signs going higher. So on Monday this week I'll be bullish, and I like to see what the market will offer us, and to whatever point I would like to see as gravitate to is this buy side liquidity there, this weekly buy side. So as for me, I'm bullish during uh this week I'm bullish. So thank you guys for being here. Whatever you've seen something that I've missed, just please tell me, or whatever you've not understood, just let me know so that we may clarify. But thank you for being here. Santeni sana. Until next time, guys. Be safe.